All right, welcome to day 3 of the intensive. Happy hump day to you. Sorry about the technical difficulties there. I have no idea. Zoom and my DSLR were not on speaking terms this morning. They were not happy with each other. Let's hop in. We usually have extra time for these prep meetings in the morning, so we're almost 15 minutes behind here, but it's not a problem. And, this is one thing about prep, guys. Like, as you do it sequentially, day after day after day, you tuck away a lot of that information. It does get easier as you build on it. So let's start the screen share. Yearly back up into VWAP. As we know, it's the general thesis there is that we're progressing through prior value, and that's pretty much all we have. We've rejected the lower end twice. Not really impactful for our trading. Quarterly, we've the main thing is that we're in this bull thesis working towards this destination 41.25. We've got resistance in the way, right? VWAP and prior value high. As you guys know, we've talked about it for 2 days. I'll spare you, but we've been so above and below this level that we're definitely making it of lesser importance than the DVA. So we have one law of market dynamic on the DVA, and that's this. We have another law of market dynamic on the PVA, and that most recently would be, let's call it this. Okay. So these things are competing with each other. So it's not too surprising to see when we have gotten into that spot, there's been chop in between those areas, right? So is what it is, less than ideal conditions. I'll say this though. If prior value was so strong in this case, and that was the main driver of this market, why is it that we continue to come back to it, right? And that's going to be something we can see even more on some of the smaller time frames. Why is it that we keep coming back to it rather than this wick here, maybe one more retest, and then causing a failure of the rotational DVA to work towards this lower target? That's not happening if you want to ask what's not happening on this time frame. So again, quarterly, big time frame here. We are at resistance. I'll give you that. But I'm more in the camp of the bullish thesis on the quarterly. Monthly. Here we are kind of again where we started out the week, back up at monthly developing value area high. We do have monthly prior value lurking just above. So it's definitely an area of resistance. A little bit of that compression type feel, right? A little bit of that compression type feel to what we're seeing, right? So you can see that there's essentially this some form of ascending wedge, which continues to knock on the door of this area. So while it is resistance, in my mind, it is weaker than normal resistance. So we'll keep it at that for now. No great narratives to trade yet. Let's go to the weekly. Hey, yo, we got something. We've got something. What do we have? What's happened overnight? Well, we have a fresh condition shift, right? In fact, I'd be willing to call it essentially imbalanced up at this point. We made a huge probe here and aren't just snapping back rapidly, forming like a wick from the 2 or something. We printed multiple bars beyond the 2, and we're just kind of rolling over gently. So prior value, some of you might have rhythm questions. You might say, well, Merritt, we rotated from here to here. Well, guess what? Do you think that is the size of the standard rhythm? No. Given, I mean, maybe towards the tail end of last week, yeah, but not currently. That rhythm this week, lower volatility, has really compressed. So I'm happy calling it a breakout. Another thing you can do sometimes is look at it relative to the actual size of the PVA itself. And, this is what, 25, 28, 30%, of that entire width. That's just another like check. But anyways, we now are, essentially looking at that. So we have a bullish area here. We're going to have developing value meeting us right there today. So that's going to be probably what we build our trading around today. But what's the problem so far? Yes, I do buy more into the bigger picture yearly, quarterly bull thesis. So great. The weekly's giving us a chance to be bullish. Great. Well, the problem is that those, again, are the really, really high time frames. I'm going to change that to a bull level right there. And I'm also going to start to just keep an eye on this. I'm going to go ahead and make it a bull level just because the confluence of those and the way we're trading into that area. Unfortunately, the next closest time frame that we've gone through so far in our analysis is the monthly, and the monthly is right into resistance. Not only resistance where we've just hit here, but resistance just higher as well in terms of prior value. So, this 40-40 area and then the 40-55 area are both areas of resistance on the monthly. That whole zone is just an area of resistance, like we've been talking about all week and drawing on the DMI chart and whatnot. Structurally, what's going on? Well, yesterday, right, we're simply caught in between the 2 most recent CVAs. As you guys know, trade opportunities, ideal trade opportunities, were short from this one, and then some longs after this one, right? Well, overnight, we break and hold, and now we're almost all the way to the destination, 40-41. So 40-41 is just yet again in the middle of this range of little stacked resistance areas, most of which are kind of demoted to weaker resistance. In terms of structural narrative and laws of market dynamics, 40-41 is a destination. It is not a bearish level. There's a difference. Learn to see the difference between destinations and directional bias areas, right? We have a directional bias structurally today, and it is bullish from 07, right? 41 is just kind of the target area for this thing to complete that move that's underway overnight. So that's it. If we were to go and give these kind of ranked scores real quick, let's give it a +1, right? Plus is bullish. We'll say 1 through 10. +1, +2 for quarterly. -2 for monthly, right? Plus 8.5, 9 here. And then it depends on how you want to do this ranking. I'm just like off the cuff here doing this. If we were down in here still, I'd be giving this, it's separated by a day. 2 days actually. I'm sorry, this is the most recent CVA. So accepting back into this, the fact that we almost already touched the destination, almost into that high. I mean, it's just, we were excited about it down here, but now once we're here, it's like, oof. So let's give it a +2, right? It's still bullish into a destination area. So, more things point long than short here today. But not by much. What are some other scenarios, some condition shifts we might see? Well, if we're able to, whether or not we get this pullback or not, right? Maybe we just go fast trend. Maybe we just hold this and keep going, right? Very quickly. That puts us in an interesting area, which I believe we had some hypos for on Monday. We definitely had the structural version of that yesterday as well. But if we start to hold, that puts us holding above 41, right? That's a nice opportunity. It's still not nice in terms of all clear, and we wouldn't get that on this time frame today. But on a micro basis, we start to hold above quarterly, right? That's quarterly's confluent with this level. So anything above, let's call it 40-40, adds an additional layer of bullishness, because now we have what's going on here with what's going on here and a micro there. Still problematic here, right? Because we're gonna be into resistance here all day, especially on the acceptance read on this time frame. On a micro read looking at these levels, yeah, we might start to hold over 55 if we're really cooking, and then that provides additional opportunity because we're now bullish above structure. We're continued to be imbalanced and breaking out on this time frame. Now we're again micro breaking out on the quarterly and micro breaking out there. So the higher we go here, the more all clear we get. And again, that aligns us with the big picture narratives, right? We're talking about getting above 40-40, 40-50. I'm looking at 41-25 up here, right? I'm looking at 4,400 or wherever prior value high is on the yearly. So it does align us with those big picture narratives. Don't think that just because we are popping above here that we're, we're extended on the weekly or whatever, or we're starting to hit extremes, on the monthly. That's true. And at some point, the probabilities point that we will see some form of a pullback. But when the big time frames tell you that there's runway, sometimes the lower time frames can maintain that energy and stay at those extremes. Notice if you were trading, in Asia or Europe, there was almost no opportunities other than on a lower time frame. Perfect imbalance up until recently, right? Perfect imbalance, pullbacks holding, but there was no good pullback. I did note on the NASDAQ, it really gave the trade, right? There's that lower edge. It has an immediate, except for yesterday was a day one attempt to break down a 5-day balance in the NASDAQ. It gave that nice return pullback to get involved and position for that. Real quick, running through NASDAQ. We might scalp some NASDAQ today. That's kind of my preferred scalping vehicle currently. Yearly is at an upper extreme, right? opposed to the S&P. The yearly is just coming off the lows. NASDAQ is up at, it wicked the 1.75. It's all the way back at the point of control from last year and kind of settling in there, as some of these other time frames like the quarterly are going to let us know, hey, we're going to hold imbalance up here, or we're going to fail to do that, which is going to mean more rotational behavior on the year, on the quarter, on the month prior, and developing value right there at the month, which is confluent with the quarterly area. And then a little bit different dynamic is what happened yesterday, failed to stay below weekly prior value, and now traversing back through the imbalance down, failing similar to the S&P. And now we're almost at the upper destination of that failure of developing value. And we're back inside of CVA. More room for the NASDAQ to run to the other extreme of its CVA versus the S&P is already really close to it. NASDAQ can run all the way up here. So we can adjust our DMI chart. Here's what it looked like yesterday. Overnight session, all the way up here to the upper extreme of that. We decided to move that bear zone down and not include monthly prior, which we had it extended up to on a Monday. And that's overnight high. That's where we turned from. So beautiful, beautiful DMI work there, again, even through the overnight session. But let's start over, shall we? So sometimes I don't delete it all. I just kind of start working on it. So we're going to have this little bull area here. The bear zone. I'm sorry, I just can't have it covered up. I'm just going to delete everything off the DMI chart and start over. So I'm going to draw the green bull zone from like 24 to, I mean, it's really going to end up being pretty tight on 24 because this DVAs keep continuing to lift and lift and lift, right? So just that 24 area. Heck, the DVA might end up above PVA. That's fine as well. Okay, so first drawing there. Let's put the CVA level above at 41. CVA level below at 07. What time is it? 8:03. We could again defer to the CVA as kind of a short-term proxy for monthly development value high, quarterly prior value high. And then we could simply keep an eye on monthly prior value above there. Something like this could really work. What would cause us to be bearish today? I think any failure of this bull zone, it lets us know something. Yes, we're going to have the mildly bullish 07 CVA low. Yeah, it's starting to become an older CVA, right? We had a day and a half outside of it there. We were back inside it. Yesterday, we were below it. Now in the overnight session, we're back inside it. So 07 is not nearly a fresh level that we want to be super bullish from. Law of market dynamic tells us we're bullish from 07, destination 41. I get it. But you have to assess the strength of those narratives based on all the tools that we do to do that, recency, stuff like that. So I'm kind of all for having a pretty good binary line in the sand around this weekly level, and then kind of deferring to some of these other things as a bit more neutral. And I'm okay if short-term conditions are really nice to short below 07, below the line in the sand, even into that composite value low 07. So I think I like what I've gotten here. Probably have some more levels that I want to include below, right? The 84 and 51. It looks nice to me. It's a little jumbled up, but guess what? We have seen smaller ranges. Take a look at this. Here's this tool that I use on the yearly. Take a look. At the 20 period moving average of high minus low, right? The range for the 24-hour session. Volatility increasing through the tail end of last year, early this year. And then that pretty much stabilized. And, you know, we could even still say we're kind of, well, what we should do is do this, right? So it's the high end is gently coming in while the low end is kind of staying around that 60 handle range. Look at where the past 3 days have been, right? So it's been very low relative to where our average is, to where a recent cluster of days have been. Super, super low. Yeah, news, what we have, existing home sales at 9 a.m., I think. This is on Eastern time right now. So yeah, 10 a.m. pending home sales. 10 a.m. Eastern, 9 a.m. Central. I'm not worried. I'm not concerned with that release at all. I don't really care. I would hold a position into it. It's not something I'm worried about. One thing that's interesting in NASDAQ is kind of the order flow right now. We're seeing kind of what we talked about the other day, kind of this extreme dislocation. Strong selling, lack of aggressive buying, strong selling, regular buying, strong selling, kind of weak buying. So the up moves have not had the aggressive buyers behind it. Obviously, it's more of a passive driven type move. So what that tells us now that it's like, it says, hey, we're really out of whack, not just like a rotation or two where you see a divergence or whatever, really out of whack. It tells us, hey, you don't need to look at this order flow and say, oh my gosh, look at how bearish it is because the order flow is so weak and and price is high. Let's just keep trying to short this thing. No, that wouldn't have worked for the past 8 rotations since it showed it that it was doing it in a major way right here, right? Possibly even there, right? So once it's really out of whack, you just have to acknowledge that it's out of whack. It's passively driven, that your normal view on strength and weakness is kind of in the what's it called? The upside down world from Stranger Things. It's just kind of opposite of normal. So you just rely less on it. You can monitor to see if that pattern persists, if there's a change to it. Now, another thing we're going to be running into here, probably starting today into the next couple of days, is what? What's going on in terms of the cycle of things in the trading world into the end of this week? End of quarter. That is correct. End of quarter brings about some of the weirdest stuff you'll see in markets, especially for short-term people like us who are focused on small minutia of the market. Well, all of a sudden you have these huge players making huge quarter end decisions, whether they're just kind of doing something to make the books look a certain way or they're trying, whatever. You get some really weird sudden blips in price. You get some really weird dislocations and less reliable signals between delta and what's happening in that market. So we're in for a tough week here in the intensive. Quarter end can be really difficult trading conditions. It really can be, especially the last day of the quarter, Friday. All right, so real quick, just to reiterate, the plan for today is to bull above, bear below, using neutral references as secondary ways to get involved or to take profits into or whatever, right? So if you're long from here, this is a good one to take profits. If we start to hold above here, it could be an additional long opportunity. This is a good one to take profits, and so on, and the opposite to the downside. Tick size on the TPO charts. Five points, 20 ticks. We could put the DMI chart here. If I get the pullback to the bull zone, would I give it loose leash rotational? Probably not, because of we've got decent resistance in our face. I think loose leash would be super appropriate if we had a zone and just we had fantastic all clear type of situation where it was really worth it to give it maximum chance, maximum opportunity. Given the resistance, the potential for different narratives to complete or to show up or to express themselves, like the quarterly return pullback of prior value, bearish, right? We need to see it behave nicely. That's my take on it. Again, it's loose leash type conversation, trade management, core position trade management conversation is directly correlated to strength of narrative, as always. What's our strength of narrative today? If yesterday, I think I said it was a C or something, let's say C minus, I don't know. A day, we've got the shift on the weekly, but it's into resistance almost everywhere else. We have currently a situation where you know, the destination is being hit on the structural area. And we might upgrade it to a C plus. I think we get into the B range on a hold above 41. So that's the structural breakout aligning us with the weekly. And then a micro basis breakout on the quarterly. So I think if we can keep on chugging here and get some kind of IPB over 41, that's kind of like a B minus type trade. Just a reminder, guys, we're gonna do questions, especially questions not pertaining to right here, right now. We do that on the Q&A. So jot those down, save them, don't forget them, and we'll cover them later. Let's not forget, process goal today is around trading with the proper acceptance. So we're not going to screw that up. Just go into my journal here for a moment. If I was really struggling with acceptance and having a lot of issues around that, which, as I said yesterday, I'm not. I've just made some silly mistakes lately, and I'm going to correct it right away. But if it was an issue that I was really struggling with, all kinds of things, not only would I focus myself here pre-market on that task at hand, I would do visualizations. I would come up with some affirmations that I would need to be journaling throughout the session. If I was really having a hard time with my self-awareness, I would set up a little timer to beep at me every 5 minutes, every 15 minutes, whatever we feel appropriate, to just wake me up, right? It's easy to drift off into habit patterns and old things. Set that little loop timer, wake yourself up periodically, and that little ding reminds you, hey, are you conscious? Are you in conscious control of your actions and are you aware of your thinking and feeling right now? If not, get back on top of it, refocus on your process goal for the session today, things like that. This is stuff that I work with my traders on, my AGM students on. All right, less than a minute and a half until pit session open. Yeah, thanks, Ryan. The 0535 is another really good tool that you can apply in a lot of different ways, in terms of just your development. You can apply that some really, really good ways. And here we go. So a small, slightly out of rhythm IPB. Let's go with it. Right back into that 39, that 41 level, our first neutral level above the bull zone. Again, it feels like it's quick, but it's right after the open. There was some speed of the tape to what was going on. Doesn't appear that we have the low end quite yet. I'm giving it just a little bit of room to kind of wick the actual references. We had the prior swing high right there. But this is the game plan, where this is a pullback, an imbalance pullback to the 4041 neutral level from the DMI. NASDAQ is making new highs currently, and the S&P is obviously not. Decent rhythm spot into like probably the 1.5 is really kind of what's, I feel like, DVA wise defining this movement right now. So maybe, it's going to be new high of day. 1.5 will be a good first scale spot, unless we run into kind of some issues before then. So far, we're not getting the buyers off this area. See, delta is very flat from here. So obviously, we're very susceptible to stop runs below the current low here. Tough trade location to be long here, let's be honest, right? It's our plan, and we're doing some structural stuff like we did yesterday. It's a breakout pullback of a CVA level, but we're beyond the 2 on the weekly. We're into resistance on monthly, quarterly. It's a tough spot, right? That's why it's not an A narrative. So very problematic lows here short term, right? I'd be surprised if we don't wick these lows. Buyers trying to push, getting absorbed a little bit by passive seller. We're due for a violent single bar move. Nothing crazy, but people are vulnerable all over the place here because of this sideways activity. Either this passive seller lifts and we see a little blip through, 2 or 3 points, or we see just an out of the blue stop run through the lows here. That's my take on what's next. I realize that sounds like I'm saying, hey, we could go higher or we could go lower. I get it, but I'm talking about the veracity of what is very likely. Because I'm thinking about who's positioned, who's trapped. It's that type of thinking. Again, I'm just commentating on stuff. Maybe we'll do both. We got the upside stops there. I'm going to scratch here. The trade is still good to go, still active. I would just like to be out of the way momentarily. I'll either hop back in if we're stabilized with buyers and we don't see what I think is most probable, which is a stop run through the lows, or we see the stop run and then I see if we stabilize after that. Risk reward decision of opportunity cost. If I have to worsen my average fill a little bit higher, chase a little, versus saving a potential full out, 1R loss, if we get not just a one tick through the lows, but if we get an actual dropout through. To me, that is the highest probability next move in this market. How's the market trading so far? Not very good. Take a look at these 3-minute candles, right? Not great. What do I mean by not great? Small range, no clean movement, bar to bar overlap. Might get back in if I believe the buyers. Okay. We'll get back in. They couldn't run the stops and they start lifting. So that was the plan. We didn't want to be out of the long. The long was never invalidated. Like I said, it's just a matter of high probability stop run lower. So far, it hasn't happened. We see another chance to ride a little piece of momentum higher if we can start to see any momentum in this market. So we're back in. There's strong buying there. I'm out just because screw that little move. That was not that was like, okay, something's very, very wrong. And that was me manually banging out when I don't like what I see. No time to talk about what happened there until after the fact. Might be that right there is exactly what I was talking about this morning with end of quarter blips. There's you an end of quarter blip. Yeah, I think it's scaled correctly. See, here's yesterday. It's just that's how crappy today's trade is, right? So it's all relative. All right. Once more, we'll join the lifting of buyers and price to see if we can get continuation. I am putting hard stops in the market because of what we saw a moment ago. Speed of the tape has picked up here. A little faster tempo. I use this analogy once more. I think I came up with this analogy on the last intensive. But these fills that we're seeing here from me today, my behavior, it's reminding me of that analogy. I often trade like a little annoying mosquito, right? I'm just buzzing around, just trying to get a little drink. Another dropout. And if the move is going to occur, I'm just annoying enough to kind of stay there and be there to kind of, get that drink or whatever. But I feel like that's a good analogy a lot of times for my style of annoying the market enough to where finally, if it's going to work, I'm going to be there, and I'll take a few paper cuts I'll take a few swats, to finally get what I'm after. Terrible conditions here, friends. Terrible. Look at this order flow. These dropouts. Pretty bad stuff. Three-minute chart. So now let me talk about rhythm for a moment. Unfortunately, because of the way this is traded, we'll forget this long one here. We'll just focus here, here. Again, we knew this was a little out of rhythm when we started working this position. We knew it could take a little more time to unfold, and it has. Okay, let's kind of make this more like that. But now we have this atrocious move, but it's actually starting to have a decent amount of rhythm to it. It just hasn't moved far in terms of price. It's actually starting to be more time-based. So I'm going to be looking to get scaled somewhere, because this, quite frankly, sucks. I don't mean that from a mental perspective. I'm not frustrated. I'm fine. It's okay to comment on crappy price action versus great price action and be aware of that from an objective point of view. All right, 7 minutes until the top of the hour, both news and TPO change. Time for another crazy dropout in Delta. I really want to scratch the position right now, so I'm assessing market generated information, whether or not that's too impulsive or the right call. I'm on the fence about it. I could be happy either way. I would give this trade a 5% chance of working. Forty seconds. Okay. All right. So if we can push to new highs, I'm going to milk it for all it's worth. I'm going to monitor immediate strength and see how much of how the most I can squeeze out of the scale. We're we're on a desert here, just looking for a bottle cap full of water. Oh, Savas, I couldn't agree more. Oftentimes, the market needs to do something to reset the inventory so that it can do something else. And we're certainly in a case of that here now. If we would wick the lows, we would reach new highs. That's, I'm not saying anything's a certainty, but you know what I mean. I mean, should I throw up limit orders up here? Yeah, if it wasn't premium cost prohibitive to make a bet that we trade outside of this range today, I'll take that bet. All right, guys, little poor high here, but we've got a poor low as well. Here's the try. Push, push, push. Pitiful. Took the scales on the turn. This sucks. Adjust my hard stop quantity to match my remaining position size. Well, let's get out of here. What do you say? Oof. I'm out. Yeah, I'm not going to continue to chase any upside momentum because there is no upside momentum here. The three attempts that I took are plenty at this point. At this point, we need some form of a reset to continue trading the thesis. Let's see what sellers have here is kind of what my thinking is. Very much a bear flag type of pattern, right? So let's say that the market starts trading higher from here. It runs up to 40.55. And we're left sitting on our hands. It's a sequence where we would have to just gladly tip our caps to the market and say, this was too messy for me to access the trade, for me to participate successfully. We dealt with three massive, 1,000, 2,000 contract dropout in order flow. Congratulations on, market. You successfully, traded so poorly, you kept us out of accessing that position. That is the mentality with this. There would be no frustration. There would be no resentment. The market is not our adversary here. The market is not alive. It's not a person. It's not out to get us. It's the end of the quarter and it's trading like crap. It's our job to make the smartest decisions with that information, with the short-term conditions, with whatever narrative contextual view we have. Ranelli, I have already mentioned that to Ryan that let's avoid this next time with intensive scheduling for sure. Although, just like watching me make mistakes yesterday, just like watching us deal with a crappy situation here today, as Trader Biku says, it's real life, right? So you are going to get some lessons from watching us go through this that you wouldn't get from watching us, knock out a few easy winning trades on some easy, conditions with great narrative. There's valuable lessons both ways, and you get that. But I do agree, though. I think that it would be better to try to avoid end of quarter for intensives, just so there's less of, hey, let's there's nothing to do here. This is not, great. But again, there's lessons in those moments too. So. All right, so the sellers are trying hard here to get new lows. We now have an official poor low in the market profile. There's the stop run. Into almost delta neutral. There's the official market profile taking out the poor low. There's actual delta neutral. At this point, intraday condition is rotational. If we're long here, it's a compromise of DVA. All right, let's go for it. Back in the long. Pretty tight leash on this thing. Needs to act pretty good. First scale, I'm looking for the development value high area, because now DVA is technically against us. So I'm going to respect that dissonance and look for a scale there. Not a ton of buying off the lows yet. Delta's still close to neutral. Kind of stalling at RTH VWAP. There we go through it. If we start to turn here, I'm going to take the scale before planned. Well, saw a little bit of selling as soon as I said that, but they didn't really change the nature of the up move too much. Buyers are problematic. Lack of buyers, that is. Scaling some out here. Please, just a thimble of water, please. I'm gonna grab something to drink. This is like trade. Yeah, it's like trading at like, 8 p.m. Central or Eastern. Take your pick. It's like trading at that time. Stopped out. I'm down less than 1 R overall. Really nice job taking that unfortunate quick scale out. I say unfortunate because there was no one buying that market. Was not looking good. I held on till the last moment. Wanted to scale into developing value high. Wasn't going to get it. Took what I could. Essentially a break-even sequence there. Character change +2. No, it's current. It's not on my radar. It's moving so rapidly on my 30-minute chart. It's just not significant for me on that time frame. You might see something on some kind of volume chart that I don't. If you're down less than 1 R today, or if you haven't taken any trades today, you should feel like a king or queen. Royalty, trading royalty. You're having coffee and pie with the king. These things are good. Bark thins, dark chocolate, almond, and sea salt. Acceptance wise, oh man, I just looked at the intraday chart here and was asking myself, what is the rhythm? I guess the best answer is there is no freaking rhythm. What is the rhythm? I'm gonna go here, 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 here. You could do something a little more short term than that, but it's so atrocious in terms of little back and forths. So that's where I'm at rhythm wise. So therefore, I'm gonna say no acceptance yet below our DMI 41. Still above from an acceptance picture. I'm just not going to re-enter again, though. I'm just not. I mean, I'm not down much money at all. You know, 0.6 R. If I wasn't on the intensive, I'd be making a tea time about now. Hitting the golf course, weather permitting. That's what I'd be doing. All right, I gotta stop with these things. Oh man. Another poor low. Balance trader. I don't know if I would call it bearish acceptance, but I think we would be in agreement. Yes, I think it's we are 100% rotational on the ETH. So, most recent shift was from imbalance up to rotational. So therefore, yes, technically, more bearish from the upper end than bullish from the lower end, although that doesn't correspond with the narrative read. Right. Sellers are just absolutely unwinding, and price is not really doing what that would signify. Each of the two small bounces that we have seen have almost just been sideways delta rather than any buying behind it. So sellers are just absolutely dominating the tape. Is there a little bit of passive buying mixed in with that? Yeah. But that's my read at the moment. Really, this is a good, healthy pullback for this market. We had the breakout from weekly. We've yet to have a pullback, right? Let's just focus on the weekly real quick. We had the breakout. Let's go ahead and adjust this level. We have yet to retest weekly prior value or have an imbalance pullback on weekly developing value. This pullback makes sense. When we were getting long this morning, what was I saying? We can go with it. It's our DMI. We ranked down and distilled that information down to going with that that attempted hold above 40.41, which we've just spent an hour doing until now. But what did I say? I said it's a horrible trade location on a lot of other time frames. To bring those two thoughts together, it's a horrible trade location up here. But if we pull all the way back, it becomes a great trade location, at least on the weekly, right? So when we were getting long earlier, the time frame that had a good trade location was the CVA. Am I worried about introducing dissonance between the CVA and the weekly now, right? Because we'd be below the CVA if we got long from down here with now the CVA resistance above. No, I'm not overly concerned with that. Go back to the DMI. There's a reason why this is the bull line in the sand. I'm bullish above there, even if we're below 41 again, because of how I ranked those variables. So this could be great. I'm going to this. As I mentioned, there is some mild absorption of sellers, but really it's sellers that are just dominating this tape, and there's a massive lack of buying. What if on this move up, the buyers brought us back to this level in delta? Then this move would have started, instead of going from there to there, it would have gone, it's moving so fast we can't even keep up with it. It would have gone from here to here. And this slightly lower low would look exactly the same in delta. The reason those are dislocated was a lack of buying. The reason they continue to be dislocated, strong selling, but there was no buying during this. That's why there's such a dislocation. It's a dominant seller's tape right now. The main read is not, oh, sellers are getting absorbed. That's not the main read. This is strong selling. Obviously, acceptance read is now below 41. We're looking for our main idea of the day into the bull zone. It's now coinciding perfectly with the lower extreme of ETH development value. Maybe we'll push through 10K, pop back above, and hold 10K on something into this area as well. Was there an opportunity to scalp short the last two pullbacks, not including the one that we're currently in, moves higher, that is? Well, I was long during one of them, right? So I would have had to have made the decision to flip at that turn where I took that scale. So that's probably not going to happen. But then the second one, this one right here, could there have been a decision to take a scalp short here? Yes, it would have flown in the face of my acceptance picture read, which is my process goal today. So that's pretty gray area, pretty, not cool to do. If I was in more full discretionary mode, didn't mind going against an acceptance read, then absolutely, that's a pretty decent scalp. You have a failure of the imbalance up, this flaggy pattern that starts to break down, order flows projecting that, hey, something is really wrong with the buyers, which I was talking about from a lack of buying on when I was long, right? Well, guess what? That's a good thing for shorts, right? So once you get this next one here and there's nobody buying it and it's the first shift of kind of delta neutral, it's a scalp short opportunity for sure. Like, you could do that depending on your style, your process goals for the day, all those kind of things. For me, I didn't want to mess with any acceptance picture read, which is probably why during that time you heard me walk through what is my acceptance picture read, right? Because I want to connect with my process goal. I want to be self-aware, in conscious control of my trading and what I'm doing. Essentially in the minus 10K here. As I mentioned a few minutes ago, I'd love to see it kind of try to get through 10K as we, or get through 10K as we work lower towards our line in the sand. And then see a shift in the tape, right? Right now we have this just absolutely, right? Here's the shift. We have this absolutely seller dominated tape. We could drop through there as we get down into here. And then we see something like this, right? That would be nice. Spoiler alert, though, market's not going to be nice today. We'll see. Wonderful short opportunity, by the way. Let's continue. We talked about this pre-market, but let's continue talking about possibilities as they potentially show up. Wonderful opportunity on anything below here. Great short opportunity. And if that coincides to us not popping back above 10K, perhaps retesting it from below, beautiful. So to me, this is by far the most excited. I'm not really excited, but interested uh, in a potential inflection or trade opportunity or situation that we've been in all day. In fact, that we've been in all week is coming into this inflection here. It's essentially the best thing that we've seen all week. So see what we get. Good job, Brandon. It was certainly projecting it. It was easy to see, especially for someone like you who's worked really hard on their order flow reading. Brandon is an AGM alumnus. So why am I so quiet? Well, there's literally nothing to do. We're waiting on the market to get down into an area of interest if it can get there. If not, I mean, if something really, really changes and we go imbalanced up again intraday, we'll take a look at it, above 41. But in the meantime, it's time to work on other things. It's time to do other things as we're waiting for the market to come down into our zone. So, I mean, I'm staying on the stream because I feel like it's worth it in terms of if we get down into this area, short or long, depending on how it sets up and the acceptance is. It could be, some good trading. So just hanging out until then. I'm going to mute myself and I'm going to pause the recording just because it's going to be nothing for a while. Okay, we are back. I'm actually going to end the stream as we drift higher here instead of getting into that level. There's no telling, we could be here for the rest of the day and not get there. So we've been on the stream here for about 3 hours. We got the meeting here in a little bit. And I'll need to get some lunch and stuff like that. And you guys do the same. So we will continue to monitor for a touch into this area. I will absolutely update you guys in the group chat if and when I start making any decisions at all, or even looking to make decisions. I will really, really update you guys as if I was on a stream in the thread there. So we'll see if we get something. Take care.